Hi folks, Greg Marchand here. Welcome to another episode of the Virtual Instructor-Led Training Program brought to you by the Service Sales Academy. In this episode, I want to talk to you about growing gross profit by job. Now, we did a gross profit segment a little while ago, but this time I want to narrow it down to per repair order. And, you know, sometimes people will pose the question to me, who cares about gross profit? I'd rather look at revenue, or I'd rather look at my net profit, or I'd rather... Look, we all care about gross profit. And the saying, take care of the pennies and the dollars take care of themselves, is to me really what this comes down to. When I work with a lot of consulting projects, a lot of shops that I consult with, it amazes me how often it's just the little things that can grow the business. Oftentimes my clients have the big pieces. They don't need help with the big pieces. They need help taking care of those pennies so the dollars can begin to grow. And that's where gross profit comes in. And gross profit is really how we all get paid, okay? Good gross profit means that we have revenue coming in and that the expenses are minimal. You can't have good gross profit without enough revenue, and you can't have good gross profit unless the expenses are kept under control. If we have good gross profit, it means we've got a big pool of money to pay people from. And at the end of that, if you're a shop owner, after you have good gross and then you pay your people, what you've got left is your net profit. So gross profit really, really matters. It means expenses are under control, and it means that we have the revenue coming in. Okay, so if gross profit's made up of revenue and expense, then what do we pay attention to? Do we try to get more revenues come in, or do we control expenses more? And my answer is always both. Look, it has to be balanced. Of course, the more revenue you have, the higher your gross profit's going to be if you have expense control. And no, you can control the expenses all you want. And if you don't have good revenue coming in, it isn't really going to matter. All right? But if you're a service advisor watching this, you're not going to have control over all of this. So what do you have control over? Well, you've got control over sales, and sales is essentially revenue. And when I say you have control over sales, no, you don't have control over whether a customer says yes or no to something specific, but you do have control over how well you sell, how often you ask for the sale, and ultimately how much you do sell. You also have control over who does what job. And what I mean when I say that is not what employees you have, but what technician gets which repair order, what technician does the diagnostic work, which technician does the oil change, which technician does the brake job. You also have control over which jobs take the least amount of time and therefore have the highest profit. There's a little more to this gross profit thing than what there appears on the surface sometimes. But I want you as a service advisor to focus on what you have control over. You can't control the big expenses. I understand that. You have limited control over the facility overhead. You know what the water bill is, and the electric bill, and the whatever. Limited control, right? Can't always do something about that. You've got limited control over the employee pay plans, and therefore you may not be able to control the gross profit from the point of what are our costs of goods sold. In other words, what do we pay our technicians? Because they're part of cost of goods sold. They're not salaries. You don't have always control over materials. Now, you do have some control in a minor way over these. Can you remember to shut the lights out when you go home at night? Yeah, you can. Does that help with overhead? Sure. Can you control rent? No, you can't. Can you reduce your use of certain materials? Sure, you can. But the big expenses in running the business that affect gross profit, you don't always have control over. And I get that. You can't control marketing, which brings revenue. You can't control staffing levels, which will ultimately affect the gross profit, and for the shop owner affects the net profit. You can't control how much you charge per hour, the hourly rate. All right, let's not worry about this though. Let's focus on what we can control, because we can control how many hours get sold. We can have some control over the adjustment of the hours per job. And if we look at gross profit on a per RO basis and it's not quite where we need it to be, maybe you can add a couple of tenths. All right, so you have some control over the hours that get sold. You have control over the sales process. You can, in many shops, and I don't know about yours specifically, but in many shops, the service advisor or service counter has control over who gets which job when you're dispatching the repair orders. And so we can give the higher gross profit jobs to the lower paid technician sometimes to build in even more gross profit. And you can say yes to one more customer each day, which affects revenue. And I know I just got off the phone with a shop owner probably an hour ago, and he was just wanting to know, what can I do, Greg? What can I do? We're so maxed out. And they can't take on much more work. And so, when I say this to them, say yes to one more customer each day, look, the reality of their world, all of their technicians except for one is greater than 100% productive. They're running somewhere between 105 and 125% productivity. Almost every technician. That one technician, he's our C-level technician. We just moved him up from a lube tech to doing some minor repairs. 2 weeks ago, I didn't check on what it was last week. 2 weeks ago, I know he was 100% productive. They're maxed out. They can't produce a whole lot more each day. But you know what? They're the exception too. Many of you can say yes to one more customer each day, and you can fit them in. And if each one of your service advisors says yes to one more customer each day, you'd be amazed at how your revenue will grow. And along with it, most likely your gross profit if you pay attention to the rest of this program. If you're going to start by growing gross profit, if you want to start growing gross profit, I should say, I want you to identify what the current gross profit percent is per repair order. Now, this can be you as an individual. If you're watching this as an individual, most service management systems will allow you to figure out what your average gross profit percentage is. So that's gross profit as percent of revenue. Or you can take the shop and whatever that number is, it'll generally in most shops, if it's low, it'll be right around 55%. If it's high, it'll be somewhere 65%, maybe 70. 70 is pushing it. 70 makes you a real rock star. But generally you'll find it somewhere in that 60 to 65% range. Now, if you're at 65%, when I say bump this number by 3%, that's a big target. If you're at 65% already, average gross profit per RO, go for 66%. All right, 68% is probably not real world in most places. If you want to bump it by 2%, all right, try bumping it by 2%. But if you're, again, at 65%, I'd bump it to 66%, and that's your new target. If you're at 55%, 56%, 60%, definitely bump that average by 3%, and that's your new target. That's your goal. What that means is that every single time you create an estimate for a customer, before you sell that job, you go and check the gross profit on that repair order and make sure it's at your target. Is it close to the target? Is it over the target? Is it under the target? Look, if it's over the target, no big deal. We're not going to worry about it. If it's under the target, we got to figure out, okay, why is it under? Is there something that we can adjust? We'll talk about that in just a second. But every single time you create an estimate before you go and sell it, I want you to check the gross profit on that repair order. What this does, this is the pennies thing. This is taking care of the pennies, and so the dollars will take care of themselves, right? And if you don't check it every single time, you tend to think you have a gut feel for it when you really may not. So check every single repair order, see what it's at. Now, even if you don't adjust anything, I still want you to check this so that you begin to get a feel for what affects gross profit. And what jobs are higher gross profit than other jobs? Where is my average number coming from? There's a bunch of factors that go into per repair order gross profit. Who does the work is probably one of the biggest ones, because when the system calculates that 65% or 60% or 55%, it's looking at cost of goods sold, of which your major production cost is what we're paying the technician. Technicians are a part of the gross profit in the auto service industry because they directly affect the cost of goods sold. So if you dispatch that repair order, or you assign that repair order as an estimate to a highly paid technician, your gross profit is going to be lower. If you dispatch that repair order to a lesser paid technician, your gross profit will be higher. The hours of time that are sold on the job will also affect gross profit. That's the revenue piece, because we sell time. And so the more hours we sell on that repair order, the more revenue we're going to have coming in. So higher revenue will generally mean higher gross profit, assuming the cost of goods sold, or who does the work, doesn't change. Then there's the parts piece to it, all right? And the parts are I don't say they're a major influencer, but they are definitely a factor in calculating gross profit. Just stick a dealer part in there, right? Where you don't have as much margin. You don't have as much gross profit on a dealer part, just the way it is. You have to pay more for it. And what happens to your gross profit? It gets eaten up. You want to adjust it? Look, the easiest way is to make sure that the lesser paid technician does the job. Can you do that always? No, but here's my example, an oil change. We don't make any money on oil changes, right? Margins on oil changes are tiny. So if I give an oil change to my highest paid technician, I might even lose money sometimes. If Bobby technician out there is making $30 an hour and I hand him an oil change that pays 3/10, boy, we could lose all of our gross profit in that oil change. That's why we have the lube techs doing it. That's why the lowest paid individual is generally doing these jobs. If it's a diagnostic job, we need the $30 an hour technician to do it because they're probably our diagnostic specialist. Ultimately, something like a brake job, we want to give to that B-level technician that we're paying $15 to $18 an hour to, not the $30 an hour to, and maybe not the $14 an hour, because they're not qualified. They're qualified to do the brake job, but we don't necessarily want our highest paid technician doing it because that's a good gross profit job. So mess around with assigning technicians on your estimates and see what it does to the gross profit, and you'll begin to get a really good feel for who does what job, where's the money. The other easy thing to do is you can adjust tenths of hours, right? You can add 0.1, 0.2 hours. Now, I'm going to come back to that in just a second because some of your systems are already doing this. A harder way of adjusting gross profit per repair order is the parts sourcing. And I say it's harder because it takes phone calls, it takes searches in your system, and you may or may not get anywhere with it. All right, so can I get the same part somewhere else cheaper? Yeah, maybe I can, but it's more time consuming, and I don't generally recommend it because then we get into the quality issues, we get into the parts return issues, we get into how much time you're spending at the service counter doing this. Look, getting better at dispatching the right job to the right technician and maybe making labor time adjustments is probably the only way you're ever going to make those little adjustments on the gross profit. But I want you to check gross profit on the repair order every single time so you get a feel for why is my gross where it is and how do I increase it. It's not always possible to increase it. That's the thing. You can't always hit your goal. But that's, again, why checking every repair order is really, really important, because over time, you'll start to figure out where those increases are and you'll get to that new target. Over time, you'll get to that new target. Sometimes you can't hit your goal. That's okay. I'm not worried about it. But I am worried about you looking at every single repair order every single time. Because, like I said, the highly paid technicians kill gross profit. We don't want highly paid technicians doing low-paying jobs, period. Tires will kill it, oil changes kill it, air filters kill it, batteries kill it. There's a whole bunch of parts today that don't have a whole lot of gross profit in them. They just don't have a lot of margin anymore. They're almost commodities like tires and batteries. And there's nothing we can do about that. Things we could fix are, your parts matrix. And as a service advisor, you may not have anything to do with this. That may be a shop manager or a shop owner responsibility. But if the parts matrix isn't constructed properly so that you can actually make some money on some of these parts, you're not going to go anywhere. It's gonna continually kill your gross. If your in a segment of work that you just plain have to get a lot of dealer parts, well, dealer parts will kill your gross profit. So you've got to pay attention to these things. Now, am I worried about, selling too many tires and killing my gross? No, I'm not. I'm worried about what goes on at the time we're selling the tires. Are we doing the courtesy inspection? Are we doing an adequate pre-alignment inspection? Are we selling the alignment with the tires? Are we selling the higher grossing jobs along with these? These are, I hate the term loss leaders. Some will call them loss leaders. But look, tires and oil changes especially, customers know something about. Great. But let's sell additional work along with these jobs to protect our gross profit, right? Because if we have high gross upsells, we can help protect that gross. If we have really fast, highly productive technicians, and go check out those videos on measuring productivity and increasing productivity, because if you can do that, then you can protect your gross profit per RO. And ultimately gross profit for the shop. If you can give customers a choice of parts, sometimes they'll pick the lower price part. Now, I know you know what comes with it. I get it. I get the quality thing and all that. And so I'm not suggesting this every single time, but I'm just saying that, you know what? Sometimes, depending on the circumstances, we can actually get some more gross out of a part by giving customers a choice. And then I'm a huge fan, as I said in the last gross profit program, of setting goals, because what gets measured gets changed. And if you set a goal and you put it out there and you're stretching for it and you start to figure out what affects it, you'll get there. I promise you, you'll get there. It's crazy, okay, that it works as well as it does. So if you have a lower grossing RO, then what can you upsell? As a shop, that per RO gross profit can be influenced by shop supply charges. As a shop owner or shop manager, if you're watching this, or a service advisor, ask about it. What are your shop supply charges? Generally, it's a % of the repair order up to a maximum value, because we don't want to charge 20% of $2,000 job. It gets silly. But are you at 6%, 8%? Are you in that range? You should be. Generally we'll cap it at $40 or $45. Some shops $50. But it's part of the profit. It really should be, because you're using these shop supplies and they should be marked up like everything else. What is your hourly rate? Is it set to be competitive in your market? When's the last time you had an increase? If you haven't had an increase in 5 years, well, you're not going to get to where you should be tomorrow, because you can't bump it that much. But maybe you can bump it now, and you can bump it in 6 months, and bump it in another 6 months to get it to where you should be. But you need to be competitive. It's okay to make money. And if you're a good shop and you do good work and you've got good quality and the customers love you, don't be afraid to charge an acceptable rate. I know shops right now in certain communities that are not metro areas at all. They're at $1.40, they're at $1.50 now. It's okay. Where is your hourly rate? It affects your revenue. Check your parts matrix. The shop parts matrix affects this gross big time. And as a shop owner or manager, you got to pay attention to your pay plans. Yes, if you're a mature shop and you've had technicians there for 15, 20 years, there's not a whole lot you can do, because your men and women are getting paid quite a bit of money, and it's going to affect your per repair order gross. It is what it is. There's not much we can do. We'll focus on the other stuff. But if you're a relatively young shop, or if you've got technicians that have only been there for 1, 2, 3, 4 years, then pay attention to those pay plans. Make sure they don't grow too fast, because it will kill your growth, but they've got to grow fast enough to keep employee satisfaction, right? And that's a topic for a whole nother day. There are automatic service management system bumps, we'll call them. You can set the system to take any labor time and just bump it 20%, if you will. A lot of shops are doing it. It does help keep some gross. It does affect productivity numbers, and in a positive way, okay? I would never go more than 20%. 20% is a pretty good fudge factor. And it can be set to automatically bump every labor time in the system. Well, look, you know what? I saw them go from 10% to 20% recently in this specific shop, and their gross profit jumped 2% on average. right away. So it was just a labor time bump. It makes a difference at the end of the year. It makes a huge difference at the end of the year. And then there's your sales process, right? Your sales process, if you have good preparation, if you know who's coming in and you have their history, you have their recommendations, and you can sell off of those recommendations at the time of write-up, you can capture some of this gross profit that's sitting there. And you've got the customer right there. You don't have to play phone tag. You don't run up against the clock. You can sell them the recommendations that you've already attempted to sell them in the past. Sell them at the time of write-up. And get really good at using your selling tools. I know I keep saying this, but the better you get at using your video and using your pictures and using the animations and emailing those and texting those, the better you get at that, the more revenue you will generate and the more gross profit you will generate. So get really good at selling, but that starts with preparation. And if you have good preparation and you can sell the recommendations from the previous visit at the time of write-up, you'll grow your gross profit. You'll protect the gross profit that is not there in oil changes or not there in the tires or not there in the batteries. But you'll make up for some of that. You make up for a lot of that. And then there's incremental sales. Because look, high gross profit incremental sales does affect the repair, the single repair order increases. You know, things like preventative maintenance, cooling system service, transmission service, brake fluid exchange, AC service, things like that have good gross profit in them. Use them. Use them to help that per repair order increase you're after. You know, sometimes it's selling a detailing job. Sometimes it's selling headlight restoration. Identify for your shop or for you, the sales associate, what your high gross profit jobs are, and try to include one or two of those in every sale that you make. You will grow your gross profit, I promise. But you've got to look at every repair order every time. Figure out what technicians affect your gross profit the most. Figure out how parts are affecting your gross profit. Figure out what those labor times are like and how you can bump those a little bit, whether it's an automatic bump in the system or you know, a tenth here or tenth there, and you'll grow your gross profit. I promise. You and your shop are responsible for growing gross profit. But both of you will benefit from paying attention to that detail, that per repair order every single time. Get good at watching it. Get consistent at watching it. Know who the high paid technicians are. Figure out how to dispatch that low gross work to the lower paid technicians to protect what gross profit there is in there. And focus on the profit for every line of the repair order. Look, if you've moved the mark and you went from 62 to 64, but you just can't get to 65, start paying attention to every line on the repair order. It will affect the repair order gross profit, and it will grow it. I've watched it year after year. I watch it. It's these little things. Take care of the pennies. The dollars will take care of themselves. All right. Email me. Shoot me a text. If you got any questions, I'll be happy to help out. And until next time, keep up the great work and never stop learning.